Hello and a very good morning, everyone. I, Jyoti Maheshwari, on behalf of AML UAE team, welcome you all to today's session, wherein we will discuss the impact of one of the key regulatory changes on the AML program. As a regulated entity, it is essential to keep the AML policies, procedures, and controls updated in line with the statutory amendments, which helps you stay on top of your risk and effectively mitigate it. One such recent event is the update to the Grey List announced by the FATF in its February plenary. Yes, you got that right. Today, we are discussing the impact of such FATF Grey List changes on the AML compliance function. To walk you through this, I would like to invite my colleague, Ms. Dipali Vora. She is a certified AML specialist and a qualified company secretary. In her 8+ years of experience, she has mastered the corporate compliance regime, including anti financial crime compliances. She has also helped various regulated entities and compliance professionals empower themselves with her insightful AML training sessions. So, here I call upon Ms. Dipali Vora. 1 minute before I hand over, last thing, if you have any questions on the topic, feel free to put them in the Q&A section. Also, this webinar will be recorded and uploaded on our YouTube channel. Thank you so much for making time this morning and have a great learning. Over to you, Dipali.
Thank you, Jyoti, for this wonderful introduction. So, Jyoti has already gave you, a brief idea that, what are we going to discuss today. Now, to begin with, we'll understand that what is FATF. FATF is basically an intergovernmental body which was set up in 1989. That organization was set up in order to come up with various mitigation measures with respect to money laundering, financing of terrorism, and proliferation financing. FATF as an organization, they come up with recommendations, as in what are the good practices that a country must implement in their AML CFT legal structure. So FATF plays a key role and they come up with recommendations. So this we have understood. Now FATF comes up with recommendations. Now what is the responsibility of the countries? Now countries when they when they come up with their rules and regulations or they come up with the amendments, they are required to make sure that it is aligned with the FATF recommendation. When this alignment is not up to the mark or there are certain deficiencies, they come up with grey list. So grey list is a list where these are the countries who have not come up, or I would say there are certain deficiencies in their AML CFT framework compared to the recommendations issued by FATF. So that is how the grey list has come up. And blacklist is are those jurisdictions basically where there are serious deficiencies with respect to money laundering, financing of terrorism, and financing of proliferation. So this is the difference between grey list and blacklist. Grey list are trying to mitigate that or they're trying to resolve that deficiencies. And FATF blacklists are those jurisdictions where there are serious strategic deficiencies and the things are not moving as planned. So that is blacklist. Greylist is also known as jurisdictions under increased monitoring. Blacklist is known as call for action countries or high risk jurisdictions. So these are the various terms which are used interchangeably when we refer grey list or blacklist. Now coming on to why does FATF update this grey list? Now to make you understand it, why do they do? I'd like to give you an example. Like for example, if we are studying, okay, till the time we reach our goal or till the time we have got the degree what we are looking for, we will keep on giving exams so that our assessment is done. Okay, similarly, if there are jurisdictions who are working to, to fulfill the deficiencies which were identified by FATF, there are regular evaluations happening for these jurisdictions. Once they reach the expected, goal, that is their AML CFT frameworks are, they do not have any deficiencies, the countries would be removed. And if there are still some deficiencies pending, still they will continue to be in the grey list. So that is the reason for this regular evaluations of the countries and mutual evaluations which are being conducted by FATF. Now when they pass, they are removed from grey list. When still there are some things where improvement is required. They will continue to be in gray list, and if the deficiencies are very serious, they would be in blacklist. So this is the reason why regular evaluations are being conducted by FATF. Now let's assume that a country has completed all of these the recommendations which are there, the framework is completely fine, but FATF also expects you that whenever there are new advancement, new technologies which are coming, you keep up with that by updating your AML CFT framework in such a way that you are able to mitigate the risk which would be coming from a new sector or new emerging risk. So that is the reason. Once is the first part is that you make sure that the AML CFT framework is in line with FATF recommendations, and also it's an ongoing exercise. Now, if there is a country or a person who's coming to you from a grey list country, I mean, there would be a lot of implications which would be there on that country as a whole, or an individual or an entity who is belonging to that grey list or blacklist. Okay. So there would be increased scrutiny. You are required to perform more stringent due diligence process when you are trying to onboard them as your customer. Also, banks would be little reluctant in getting that transaction completed. You might receive a lot of queries before a transaction from a grey list country would be completed, or if that country is sending any remittance to you. So these are the implications for regulated entities when they come from grey list or blacklist. So plenary meeting which was conducted in February 2025, Laos and Nepal were added because there were certain deficiencies in their AML CFT program, and Philippines was removed from the FATF grey list. So that means they have fulfilled their the deficiencies which were there. They are trying to mitigate it, and the AML CFT framework is strong enough as per the recommendations of the FATF. So this year, in February 2025, it was Laos and Nepal which were added to the FATF grey list, and Philippines was removed. Now, coming to UAE rules and regulations. So far, we have discussed about FATF, what is that organization, what are the recommendations that they come up with, what is mutual evaluation, and how grey list and blacklist is, how mutual evaluations are done and grey list and blacklist comes out. Today, we are now going to discuss about the AML CFT CPF laws in UAE, which are formed in order to curb the financial crimes. So, Federal Decree Law of 2018 was issued. Apart from that, we have Cabinet Decision number 10 of 2019, which implements the Federal Decree Law number 20. We have Cabinet Decision number 74 of 2020, which talks about targeted financial sanctions, that is screening, fund freezing, etc. So that requirements comes from Cabinet Decision number 74 of 2020. Then we have, zone-specific rule books like DIFC has their own AML CFT rule book, ADGM has their own rule book. So the companies which are in ADGM and DIFC, they are required to comply with their rule book, which is issued by their supervisory authority, in addition to Federal Decree Law number 20 of 2018, Cabinet Decision number 10 of 2019, and Cabinet Decision number 74 of 2020. Now, in order to help the companies, to comply with the AML CFT law, Central Bank of UAE, Ministry of Economy, they have come up with sector-specific guidelines. That, say, for example, you are belonging to DPMS segment. What are the red flags or typologies that you must be aware about? Then we have then we have guidelines for accountants and auditors. Then we have it for TCSPs. There is a specific guidelines for licensed financial institutions also. Now, now we are going to understand the relation between the two topics that we discussed. That is FATF recommendations and their role, grey list, blacklist, and the AML CFT law. Now, UAE's AML regime is basically aligned with the international AML standards. That is United Nations Financial Action Task Force, Egmont Group of Financial Intelligence Unit, and MENA FATF. It is very important for you to know that UAE was a founder of MENA FATF. So that is also one of the FATF styled regional bodies. So FATF comes up with recommendations. UAE's rules and regulations are aligned with those recommendations, as well as United Nations regulations, Egmont Group, and they are actively involved in MENA FATF as well. So I would all request you to, use your cell phone, scan this QR and answer this one very simple quiz. Okay. So the question is, which of the following factor is more critical when assessing money laundering and financing of terrorism risk from a grey listed country? So the correct answer is given by 92%. That is the country's history of compliance with FATF recommendation. Absolutely right. That is the correct answer. So mutual evaluations, when they are done, that is done with respect to the 40 recommendations which are issued by FATF and how well that is in sync with that particular country's AML-CFT framework. So yes, grey listing countries is completely related with the country's history of compliance with FATF recommendations. Now, with respect to grey listing, has nothing to do with the country's GDP type of currency. And yes, so the one who have answered that, that's the wrong answer. The correct answer is the country's history of compliance with the FATF recommendation. Now, the second question is, which country was added in the FATF grey list in February 2025? So the answer is A and B, that is Laos and Nepal. So these were the two countries which were added in the recent plenary meeting, which was conducted in February 2025 by FATF. Moving on. Let's understand how it's going to impact our compliance structure as a whole. Now, what happens is AML CFT rules and regulations which are there in UAE are completely in line with the FATF recommendation. So when there are any changes which are done in the grey list, blacklist, that completely impacts our AML CFT framework. And as a reason, we as a company who are operating in United Arab Emirates, we have to make sure that certain records, certain policies, procedures, a lot of things are also revised in line with the updations and revisions which recently happened. So maybe the change in grey list or blacklist is happening at a global level, that is going to impact our framework as well. Now, before we start, let's understand the AML CFT CPF compliance obligations for an entity who is operating in UAE. Because if we understand this, only then we'll be able to understand that what are those subjects and matters which are going to be impacted when there is a change in grey list or blacklist. So first and foremost, GoML registration. So that is mandatory for all of the reporting entities. In addition to that, they are also required to appoint the compliance officer. And once that is done, we are required to conduct AML CFT risk assessment, that is enterprise-wide risk assessment, wherein we understand our company business and an overall risk assessment is done to identify what is my risk as a company, which area is posing as the highest risk for my organization, and at the end, me as an organization who is operating in United Arab Emirates, how risky am I? And what kind of services I'm doing. So we'll understand more in detail about enterprise-wide risk assessment in the upcoming slides. Once the risk assessment is done, we can then draft our AML CFT policy, procedures, and control document. There is, in those documents, we're going to talk about what are the CDD obligations that we will be fulfilling, how frequently we will be doing re-KYC, what is staff training, how are we going to comply with the sanction regulation. So this is something that we're going to define, document in our AML CFT policy. What are high risk jurisdictions? So yes, 3 and 4 are the documentation. Now, practically to implement that, we have point number 5, that is KYC. So every time we onboard a customer, we are required to perform KYC. Now, KYC is know your customer. Here, if we are onboarding a company or an individual, we have to make sure that proper documentations are taken from them, like address proof and ID proof. For individual, we must have their identification document as well as address proof. So identification document could be their passport, Emirates ID, driving license, or any other document which is issued by a government, and that has a photograph on that. When it comes to companies, we must have their certificate of incorporation or trade license copy, depending upon which jurisdiction they belong to. And we must also have their memorandum of association, articles of association, and we have to make sure that the memorandum which is there, that is, correctly depicting the shareholding pattern. In case if there are any doubts or required, or the structure is very complex, we have to make sure that we have their organization structure in place or a register of shareholders. So that must be taken as a part of their KYC for identification proof. For address proof, one can rely on a utility bill, bank statement, rent agreement. We just have to make sure that the period which is mentioned in that document is correct. Like, for example, if I'm doing a transaction now, the utility bill which I'm taking should not be older than 3 months. If you are accepting the rent agreement as the proof of address, make sure that the period of rent which is there is that has somewhere margin that maybe it is starting last year, but that is extended to the month of March or April. So just make sure that the address proof that you are accepting is valid proof, and yes, it must be valid. So this is applicable for the individual customers as well as your corporate customers. Once you have the KYC documents, the next step is to screen them. So you're going to screen them against the mandatory sanction list, that is UNSC consolidated list and UAE local terrorist list. Apart from that, we must adopt risk-based approach. If we know that our clients are coming from various other jurisdictions, we must comply with the we must screen them against various other sanction lists also, depending upon our clientele, what nationality they are. So that approach must be taken. So we should not say that, yes, because I only have, I'm only going to do these two sanction lists because I have my business here. That wouldn't be the correct approach. So yes, coming to the type of compliance when you're required to do when you screen them. If you screen them and you find a full match, that is 100% match with the sanction list. Now here I'm only talking about UNSC consolidated list and UAE local terrorist list. So if it's an existing customer, potential customer, and if you find 100% match, you must file fund freeze report. In case if the name is partially matching means you are in a dilemma. You don't know whether yes it's a true match or false, it's not a match. So you are unable to take a decision because few factors are matching. So in such cases you have the option of filing partial name match report. In case if you do not find any match, then you move on to the next step, that is risk profiling. Now, risk profiling is basically where we are going to identify the risk associated with their customer. So let me just explain you one thing. Risk assessments are done. By a company is done twice. One at a company level, and second is at a customer level. So in enterprise-wide risk assessment, you identify the risk of your entire organization considering various factors, and risk profiling for customers, that is customer risk assessment, is done with respect to each of your customer, again on various factors like what is the nationality, where are they coming, where is their place of business, primary place of business, where is their active connection with. So there are various factors that you will consider when you are assessing the risk of your customers. Now while assessing the risk, there has to be the options would be low, medium, or high. So once the risk is assessed, the customer would fall under any of these three categories: low risk, medium risk, or high risk. For low risk and medium risk, you will perform standard due diligence. So what we discussed at the KYC stage, that what documents you would seek for, that is for standard due diligence. And if the customer is high risk, so high risk customers are subject to enhanced due diligence. Now, enhanced means there are some additional efforts that you will have to do when you complete the due diligence of such customers. So you will obtain source of funds, source of wealth, and you'll also ensure that the first payment is coming through their own account. You are also required to seek senior management's approval. And one very important thing is that we must have some proper monitoring rules in place when it comes to high risk customers. So there has to be rigorous monitoring with respect to the transactions which are being done with an high risk customer. Now, once the enhanced due diligence is completed, you then move on with provision of services or products, whatever, for whatever reason you have onboarded that particular customer. Once the transaction is done, or during the transaction when it's going on, if you feel that that the customer is suspicious, in such cases you do have the option of filing suspicious activity report, suspicious transaction report. Once the transaction is done, there are various other obligations also, which is which as a company we must comply with, is regular. We have to make sure that the documents which are there with respect to our customers are updated at any point in time. So we must have proper rules and regulations in our policies with respect to re-KYC, or how are we monitoring and making sure that if any document or information is expired, so how are we getting it back, or how are we monitoring them. So that also is one of the compliance requirements. We do have the record keeping requirement. Record keeping requirement for mainland companies are 5 years. With respect to other jurisdictions like DIFC, ADG, the requirement of record keeping might differ. It might be 6 years. For other companies who are in SCA, we have to verify. I mean, we must rely on the rules and regulations which are issued. The record keeping requirement would be different according to the zone. Apart from that, there are various other requirements. Now, here I was talking about the customer life cycle. So when you onboard a customer, what are your obligations, etc. But on a yearly basis, 3 monthly basis, 6 monthly basis, what are the compliances that you must do? We have to make sure that our AML CFT audit is done. We must appoint an independent auditor and get our AML CFT structure audited. There are sector specific reports also which are available. So far, we discussed about FFR, that is Fund Freeze Report, Partial Name Match Report, Suspicious Activity Report, and Suspicious Transaction Report. Apart from that, if a company is into dealers in precious metals and stones, then they have that specific report called as DPMSR, which they are required to file in case of cash transaction, which are above 55,000 dirhams. There are other applicabilities also. Apart from that, there is real estate activity report, which is to be filed by a real estate agent and broker. So that, this is one of the report that they can file through their GoML portal. Apart from that, semi-annual report, we have to prepare that and we have to submit that to the senior management for their review and keep it and also submit them to the supervisory authority when inquired for. In addition to that, we have to make sure that the staff is trained on AML CFT topics on a regular basis, as in with respect to a policy, what is the KYC form, what are the templates. So on all of these things, the staff must be made aware. They must be informed about what their obligation is, what their responsibility is. So this is the basic AML CFT structure when it comes to compliances in UAE. So again, I would request you to scan the QR and answer the quiz question. Okay. The question is, enhanced due diligence must be performed for dash risk customers. So enhanced due diligence is mandatory to be performed for high risk customers. So that is the correct answer. Low, medium, and none of the above are wrong answers. So now, so far, we have understood lot many things like FATF, role of FATF, then alignment of our AML CFT regulations with the recommendations. We also understood that what are the basic structure with respect to compliance in UAE. Now we are going to understand how the change in Grey List is going to impact and what are the topics that we need to be, we need to be alert about or that requires action from our end. So right now, if you will see, there are 7 points. That is enterprise-wide risk assessment. We need to update our AML CFT policy. Then we need to update our customer risk assessment methodology. In case if we are relying on a software, then configuration must be done accordingly. Then we are also required to make sure that the customer due diligence process that we are adopting in our organization are aligned with the Grey List, staff awareness training, and documentation and record keeping. So now, in the upcoming slides, we are going to pick each of this particular point and we'll understand that what changes, what amendments we need to do. So the first point, enterprise-wide risk assessment. So before I talk about what impact it would be, let me explain you what is enterprise-wide risk assessment. Now, enterprise-wide risk assessment is basically a cyclic process where you are going to identify the risk which is coming from the type of customers you are dealing with, the nationality of your, the geographic risk of your customers. Apart from that, you're also going to identify the transactional risk that you're going to face from your customers. What transactions you are going to do, what services you are providing, what is the delivery channel, how are you onboarding your customers, is it face to face, non face to face, or you are having a Zoom call, or the proliferation financing risk. So all of these aspects and factors will be considered when evaluating your risk as a company. So here, if you will see, there are various factors: products or services offered, customers, geography, delivery channel, transaction. So when there is an update in, say, for example, in the gray list, and let's take an example. Now, in our slide, we saw that in February plenary meeting, Nepal and Laos were the countries which were added to Grey List. Now, let's assume you have 100 customers. Now, out of this 100 customers, 50 of your customers are belonging to Nepal. So it's very evident that your geographic risk is going to be impacted. Earlier, none of your customers were belonging to a grey list country. But now, because of this grey list update, you have a major clientele coming from Nepal. So that is going to affect. So your geographic risk is going to increase and the other risk factors are going to dilute. So maybe earlier, your majority of the risk was coming from the type of the products or services you were offering. But now, the majority of risk is coming from geography. Product, services, customers, delivery channel, and transaction risk might dilute. So that is how the impact it would be when this changes happen and there is clear association in your organization also. So in such cases, we are required to reassess the risk factors. We will have to redo our enterprise-wide risk assessment. Also, we have to make sure that proper control measures are, documented when we update our EWRA, as in how are we going to mitigate the risk which is coming from that specific sector. Also, we will reassess the residual risk. Residual risk is the leftover risk after you implement your mitigation measures. And we are also required to make sure that the risk assessments that we are doing or the residual risk that we have reached, okay, is in line with the risk appetite. Now, risk appetite is basically where I am setting a boundary for myself that me as an organization is not going to get into a certain type of a transaction, or I'm not going to onboard a certain type of a customer. To give you an example for risk appetite, say for example, an organization says that I don't want to work with PEP. Okay, so that is the risk appetite that they have set. That whatever may be the case, you will not onboard them. So this is your risk appetite. Or maybe a company decides that I'm not going to accept cash. Be it anything, be it the brokerage amount for real estate or my services fees when I'm a TCSP. So if that is the risk appetite, that's the boundary that I have set. So if that is also changing because of some changes in the grey list, then we have to make sure that EWRA is updated accordingly. The next is AML CFT CPF policy update. Now, the AML CFT policy and procedures which is drafted is completely on the basis of your EWRA risk assessment. So, if there are any changes in the EWRA, that is going to impact your AML CFT policy also. But if there is a change in grey list, and if there are certain clauses where you are referring with respect to the grey list or high risk jurisdiction, links are provided, or if there are any tables that you have documented in your policy, then that will change. So your AML CFT policy must be changed. In case if there are any changes that you have done in your customer acceptance or exit policy, so that particular clause might also change depending upon your risk-based approach. Risk-based approach is basically where more the risk, you are going to have more, I would say, control measures. But if lesser the risk, you'll have a lenient approach towards that. So risk-based approach means that. So because of the changes that you did in the grey list, if that is going to impact the customer acceptance or exit policy, that changes must be done. Now, coming to AML CFT CPF policy version update. Now, you have already changed a certain, maybe a paragraph or a table in your policy. So that should be documented in your policy as a version update. Like earlier, if you were adopting version 2 of the policy, now you are adopting version 3 of the policy. So in what is the difference between version 2 and version 3? So that you must document. So in version 3, updated the grey list. So that is something that you must document in your policy. And the last is you must seek the senior management's approval. So policy can only be implemented if that has the approval of the senior management. So we have to make sure that if we are changing or we are adopting a new version of the policy, the same needs to be, adopted by the management and signed by the management. So again, there is a quiz. I would request you all to scan the QR. Okay. So an enterprise-wide risk assessment only needs to consider internal risk, not external factors like geopolitical changes or FATF advisories. An enterprise-wide risk assessment only needs to consider internal risk, not external factors like geopolitical changes or FATF advisories. So this is a completely false statement. When an enterprise-wide risk assessment is considered, internal as well as external factors are considered when EWRA is being done for the organization. And AML CFT policy revisions must be thoroughly documented, even if the changes are minor. So this is a true statement. We discussed this. Even if we are making the slightest change, maybe a paragraph is also changed, or maybe we are updating a process. So that should also be documented. And because of this, we'll come to know that what is the difference between version 2, version 3. If after 6 months, if you are amending your policy, you will know that what is the difference between 3 and 4. So in such a way, you are actually making sure that you're documenting everything, you are having your policy versions in place, and you know the difference. Now, so far we understood the impact on the enterprise-wide risk assessment and policy and procedures. Now we are going to look at the CRA methodology. CRA is your customer risk assessment. So when we were talking about the obligations of the company, the AMLCFT structure, we did discuss about the customer risk assessment, that we do it for each of our customers based certain factors. So we were talking about CRA methodology and update. So if we have certain templates that are in place when it comes to customer risk assessment, we have to make sure that these templates are updated. So if, say, for example, I mean, in recent plenary meeting, Laos and Nepal were added in the grey list. So that should actually reflect in your CRA methodology. So that is the update must be done in your templates. We have to make sure that because of a certain country being added to a grey list country, if there's a different approach that you need to take when it comes to when it comes to due diligence, maybe now you are required to apply enhanced due diligence measures because of the methodology that you have adopted. Now, if a particular customer is high risk, so the workflow is also going to change. In the in the previous slide, we also understood that if we are applying enhanced due diligence measures for our customers, we require the approval of our senior management. So change in workflow will also happen. So that is also something that we need to be careful about. And in policy, ideally, the law says that you should have a policy when it comes to re-KYC. Like for low risk and medium risk, you are going to re-perform the KYC and the entire process on a yearly basis or once in 2 years. For high risk customers, maybe you would do the re-KYC every 6 months. So if you have set this kind of rules in the organization, then we have to make sure that we are complying with that. Now, to give you an example, there's a customer, Mr. A. Okay, now Mr. A is belonging to Laos. That is your customer. And because of the change in the template, now this customer is coming up as high risk. So if now he is high risk, you might have to do, I mean, you might have to perform risk assessment. After risk assessment, maybe the risk assessment comes up to be as high risk. Then you will have to implement EDD measures for them. If required, you are now required to seek your senior management's approval to continue working with them. So this I'm talking about your existing customer. I mean, your existing customer. And the re-KYC cycle, which was earlier maybe 1 year, is now 6 months. So CRA methodology has a lot of impacts. Now moving further, software configuration changes. So in case if you're relying on any software with respect to your KYC, sanction screening or risk assessment, we have to make sure that proper configuration is done. If you are referring to a grey list in your CRA methodology, in your screening software, required updation must be done. Many softwares do offer real-time monitoring of your customers. So say, for example, you have changed your country list. You have added now Laos and Nepal. Automatically, your dashboard will give you, a notification that, see, out of your 100 customers, 50 customers you need to review, or maybe you need to go back and redo the risk assessment. So if you are relying on such softwares, please make sure that when such changes happen in grey list or blacklist, the configuration in your software screening is also done. So far we saw about we discussed about the customer risk assessment methodology in case if we are relying on any manual processes or if we are relying on any software. Now, because of these changes, it's going to impact your due diligence for your existing customers and your, your prospects. So, which I gave you an example that if it's an existing customer is now maybe belonging to any grey list country, so you might have to redo the risk assessment. You might have to redo the KYC. You might have to do the risk assessment. You might have to ask for more documentation as in if the customer earlier was belonging to medium risk, so you performed standard due diligence. So what documentation you would have would be just address proof, ID proof, and a signed KYC form. So in such cases you might have to ask for source of fund, source of wealth, senior management's approval. So now that now the compliances which are mentioned for EDD, you are all required to comply with that. So this is applicable to your existing customers as well as your prospects. So if there are certain prospects which are coming to you from a certain grey list, we have to make sure that we are complying with the regulations, our own policy, if we have updated in line with the grey list update. I would request you all to go through please scan the QR and we'll discuss these questions. So you have onboarded a new client from a recently grey-listed jurisdiction. Now the individual provides all standard identification document, but is reluctant to disclose the source of funds for a large incoming transfer. What should be your most appropriate immediate step? So when you have a new customer coming from a grey list country, your immediate step, of course, you are going to do the risk assessment. Now, after the risk assessment methodology, if they come up to be as a high risk individual, your immediate action would be to follow up with the client to understand the source of fund and seek documents to establish the same. So the other options that you see, proceed with the transaction without further questions, is not a correct approach. You are not even doing, applying risk-based approach to a particular situation. So that is a big no. Close the account due to non-disclosure. So this is something which will happen only after you have communicated something to the client, or you have done some follow-up, or you've explained the reason. So that is something which will happen after the follow-up with the client. Notify the local regulatory immediately. So that is not the local regulatory will not tell you that you are required to do or have that kind of approach. So the most appropriate immediate step would be to follow up with the client, communicate with the client, and ask for the relevant source of fund and ask documents to establish this. The second question, dealing with customers from grey listed countries should involve what? Automatic rejection of new clients, termination of existing business relationship, or adopting a risk-based approach and determining the way to deal with customers. Same approach as fully compliant jurisdictions. Now, these are the four options which were provided. The correct answer is adopting a risk-based approach and determining the way to deal with customers. So when you have a very stringent policies like automatic rejection of the new client, so that you're setting very strict risk appetite for your organization. So if suddenly, maybe your more clientele is coming from Nepal, the earlier example that we took, in such cases, the most appropriate thing would be to adopt a risk-based approach and determine the way that how you can continue your business relationship. So there has to be balance between your business and the compliance of law. But of course, compliance of law is unquestionable. That is not something that you should keep behind. So yes, adopting a risk-based approach and determining the way to deal with the customers. That would be the correct answer. Coming to staff awareness and training. Now, so far, because of the change in Grey List, you have updated your enterprise-wide risk assessment. You have also updated your AML CFT policy procedures. You have adopted your CRA methodology. Maybe now you are using a new template for assessing the risk of your customers, or you have configured your screening software that you are relying on. Now, once these changes are done, the next step would be that you are required to inform your staff with respect to the changes that are being done, why they are done. Also make sure that they should be aware about that henceforth maybe I have to utilize this template and not the earlier one. So for this reason, it's important that you give a background about what is Grey List? What are the changes done? If it's a new EWRA done, new policy being updated, so that must be informed to your staff members. Also, they must be taught about the how this particular Grey List changes are going to impact their outlook when they deal with a particular client. In case if they find anything suspicious, they might have to come back to you. Now, your staff, which might already be dealing with a particular client who belongs to a Grey List country, what is the approach that they should have? So that is also something that must be taught, and that awareness session must be done with your staff members. The next is documentation and record keeping. Now, when we make certain changes in our policy, procedures, transactions, customer CDD files, we have to make sure that we are complying with the record keeping requirement. So we discussed that in mainland, the record keeping requirement is 5 years. So in case if you are adopting any new methodology or you are updating your current policy, you are updating your template, you have to make sure that the earlier versions, the new versions, and in future also, if you're going to make any changes to your policy documentation, that is being clearly documented, that is available. And this would be very helpful in future, that if you go back and you look at the documentation, you will be able to establish a trail that, okay, this is something which was done in, say, for example, 2021. There were certain changes, this particular documents were updated. So this would really help you to understand that how a company is complying with the requirements with respect to updating and keeping up with the amendments in the regulation. So I would request you all to again scan this QR. Okay. So the question is, the staff must be trained on topics like updates in the FATF Grey List, AML CFT policy updates, and revised customer risk assessment methodology. So the answer is true. We have to make sure that in case if we are updating anything, any document in our organization, that is being informed to our staff members. Okay, because they are facing the client. So they must be educated about the KYC process, customer risk assessment process, how to identify suspicious activity. So this is very much important that the staff is made aware about, the updates and the things which are going on in our organization. Now, the next question, the company is not required to comply with the requirements of record keeping so far as FATF Grey List updates are concerned. So we just discussed that slide. We are required to make sure that the documentations are, we are complying with the record keeping requirement. So 97% of you have answered it correctly. So I think I'm explaining it right, I guess. So, okay. I'm glad I'm getting some reactions in between. Thank you so much. Now, moving on. So far, we have discussed about what FATF, compliance. Now we are going to talk about the challenges and best practices that we must adopt in our organization. Now, challenges that we are going to face when we want to implement or change certain things in our organization with respect to Grey List is resource constraints, data quality issues, over-reliance on manual process, or regulatory complexity. Now, to explain it in brief, many times what happens is we don't assign the work of, keeping up with the regulatory amendments. We have not assigned a task to anyone in our organization. So it becomes very difficult to track those changes. And because it is difficult to track those changes, what happens is we rely on, we just wait for a particular situation to occur, and then we realize that, okay, now we'll do it. And then we start, updating our policies. Maybe we wait for an inspection to come, that after that we all, we'll start, complying the requirements. So it's important that we have assigned a certain task to an organization so that, we can keep up with the requirement. Also, many times I have seen in the organizations that they perform KYC for once and they just feel that, yes, it's done. Maybe that KYC was done 2 years ago. The KYC forms are not updated. The trade license copy, the passport copies or identification documents that you have, even those documents are now expired. So many times we are in the assumption that we've already performed KYC once, so I don't need to do it again and again. So that is one of the challenges that organization face. And also one cannot keep up with the regulatory amendments which keep on coming. So these are the common challenges that you might face when you actually want to comply, but because of these reasons, you are unable to do it. Now, so far we understood that what all things would be impacted. Now let's talk about if you want to start this exercise from today, okay, or maybe you want to implement that in your organization, from where you will begin. So, in order to help you out with that, we have a plan for you. First is phase one. You will first assess your current state. You are going to review your internal process, that you will go through your clientele. If the recent plenary meeting had added 2 countries and removed 1 country, how is that impacting your organization? Do you have any clients coming from that organization or that country? Sorry. In such cases, you will first identify the current state in line with the Grey List change. Once you have identified, then you will list down your plan of action. Plan of action means you will then write a plan that, okay, on this day, I'm going to do my enterprise-wide risk assessment. After that, I'll develop my policies. After that, I'm going to update my CRA. So you are going to jot down a plan along with a date that on this date I'll complete this. Once all of these implementations are done, like you've reached your phase 2, your phase 3 is going to be, you have to inform about this amendments to your staff members, that now we are going to have a different approach for CDD, or maybe now we are required to follow a different template. So maybe earlier they were following something, but now this is the new one. Go. Now we have to follow this. And the last is review and optimize. We must make sure that this kind of reviews are done on a regular basis, to make sure that we are in line with the regulatory requirement. In case, like maybe in the next plenary meeting, a new country is added under blacklist, or a new country is added in grey list. Currently, there are 25 countries which are in grey list. Yeah. So this is the last quiz for the day. Okay, I would request you to scan this QR today for the last time. Okay, so let me discuss this with you. When updating AMLCFT policies to address new FATF Grey List changes, which of the following should be your first step? So the first step in our previous slide only we discussed is that we will perform a gap analysis, or we are going to assess the current state. If that is requiring you to take or amend any of the document, you will prepare a plan of action. So I believe 98% of them of you have answered it correctly, that we must perform gap analysis of our current policies, evaluate the impact of the changes, and implement necessary changes and update. So this is the correct answers. Okay, now moving on. The last topic for the day is about best practices. What are the best practices that you can implement in your organization? So to give you a brief, FATF meets 3 times a year, in the month of February, June, and October. So you can plan accordingly that, in this month, I might have to change the template. So this is the, you can set a calendar. This will help you to be compliant. Doing internal audits and risk assessment, we also have to make sure that if we have mentioned some rule or some policy in our AML CFT policy structure when it comes to re-KYC, re-risk assessment, we are following with that. So that thing we must make sure that we are doing it. We are also making sure that we, person in our organization is assigned with that task, that they have to, I would say, they must actually monitor the changes which are happening. If there are any new regulations, new guidances which are coming, so somebody takes an initiative to make sure that, yes, this is something which has come, we should now change this. So that must be done. Also, now it's important that we go on from manual processes to systems. software, screening systems. So that would be one of the most noteworthy amendments, or I would say upgradations, that you can do in your organization. And the last but not the least is continuous staff training. So it's important that the structure that we have in our organization must be informed to the staff. So, I hope we were able to enlighten you with respect to the, how the changes in the Grey List would impact your organization, or I would say the AMLCFT program. But if you want to read more about how can you be more compliant, or how can you draft your policies, or how can you implement CDD measures, you can see we have a lot of blogs, we have a lot of videos, we have infographics that you can, refer to. Or in case if you need any other assistance, guidance, you can definitely reach out to us. Also, if you have any questions, you can post them on AML FAQs. You can scan this QR and we'll be there to answer them. Thank you so much.